results. Revenue at 3.17 billion euros, up 4.2% year over year.
Reporting third quarter sales up 4.8%. Franklin Golf Romeo.
And Fed policy will be driven by the pace of the data. So policy will remain accommodative.
Futures off sessions low, still down about 1% on the day for a little more than 4 pennies.
So welcome to SMB's second free daily video. This is a continuation of my presentation that I gave at StockTwits at Stocktoberfest, a great event. If you missed the first one, go back and watch it. But what we did was we shared 8 trading lessons from the prop desk. The first lesson was on the value of equanimity, and this lesson, lesson number 2, is going to be on the value of being a scalable trader. So our slide right here has a picture of the non-scalable trader, and I'm going to tell you a little bit of an anecdote to make my point. So we recently hired a star former trader. The trader in his best years, had made north of $4.5 million. There were multiple years where he made north of $2 million. There were lots of years where he made 7 figures and better. He had been out of the game for a couple of years and was looking for a way back into trading, into prop trading. And so we decided, hey, let's give him a chance. He clearly had an amazing track record, a pedigree of outsized success in our game. Before we onboard anyone, we sit them down and we talk about risk. We do things backwards. We say, here's how much money we're thinking about losing on a trader. So we sat this trader down and we said, how much money would you like for us to consider losing on you? And he said, I'd like for you to consider losing 3% of my book, my pad size, the account size that I had. And we said, let's make it 5%. Okay, so we all agreed beforehand to how much risk the firm was willing to take on this trader. And we were all in agreement. What happens the first month of trading? He hit his number. He hit that number that we had agreed to, that if he hit, we'd have to think about something else for him to do. And so I sat him down in my office, we had a talk, and there wasn't really much to talk about. I mean, there was an amount of risk that we were willing to take, and he had hit it. And like other traders do in that situation, he made his case. And he said, Mike, I think volatility is way too low and it's going to go up. And if you look at my trades, I've been betting that volatility is going to go higher. I also think the market is going to go down, and you can see I've been betting that is going to be the case as well. And I sat there and I said to him, I completely agree that volatility should go higher. I completely agree with you. At that time, volatility was at historic low levels, and it had been at these anemic low levels for an extended period of time. For the last 3 years, up until maybe the last month, volatility had been at anemic levels. We call it the new normal. And there are lots of really smart people who have been saying that it ought to go up. And there have been lots of smart people who have been saying the market needed to pull in a little bit. The lesson from this trader, and I completely agreed with him, and I felt terrible about the whole thing. But the lesson from this trader, particularly for new traders, developing traders, and retail traders, is that it's not enough to be right about direction. You also have to be right with time, with your timing, and you have to do all of that while you're controlling your risk versus your reward. It's not enough to be right just about direction. You also have to be right at the right time and control your risk when doing all of it. So it wasn't enough for him to be right that VIX was probably going to go higher. He couldn't lose as much money as he did before that happened. That was the issue. Okay? You can't risk $100,000 to make $50,000. If you want to be a scalable trader, if you want to be a dangerous, scalable trader, you have to be able to control your risk. You've got to make money with inside of not drawing down too much. So lesson number 2, work on being a scalable trader, and that means having a great ratio to your downside, to your upside, which means be right on direction, okay? And be right with your timing. And third, do all of it while controlling your risk reward. I hope that helps your trading. SMBU is holding a 3-day in-house earnings season trading session November 5th through November 7th. Hopefully you get the chance to be in the area and come join us to work on your game of improving your earnings season trading. We're going to try and accomplish 4 things. 1, get you into better stocks. As I wrote in One Good Trade, you're only as good as the stocks you trade. Let's get better at your stock selection to improve your trading during earnings season. Second, trading the right setups. You need to trade the right stocks and the right setups. We will, during this training session, we will point out setups that offer the best risk reward. Setups where you have the best risk reward, where you don't have to trade in and out of those positions as much as other trades, where your gains versus your losses will be quite significant, where stocks tend to be cleaner and trend for an extended period of time. Right stocks and right setups. Third, we want to help you improve your process. Make sure that you don't miss any of the best setups, miss any of the best stocks. Make sure you understand how to review the best setups and the right stocks so you can internalize those setups so when you see them again, you trade them bigger and better. Process is incredibly important to improving as a trader. And then finally, we want to improve these skills so that every single earnings season for the rest of your trading career, you are better. So you can take advantage of the increased opportunities that occur during earnings season. That's what we will accomplish together. We really hope to see you in-house for this training program.